we've had world wars, we had 9/11, we had the Cuban Missile Crisis, we have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore. So the question is, somebody who is not an investment professional will be, I hope, reasonably elderly by the time that the estate gets settled. And what is the best investment, meaning one that there would be less worry of any kind connected with, and less people coming around and saying, why don't you sell this and do something else and all those things. She's going to have more money than she needs. And the big thing then you want is money not to be a problem. And there will be no way that if she holds the S&P, virtually no way, absent something happened with weapons of mass destruction, but virtually no way that she'll have all the money that she possibly can use. She'll have a little liquid money so that if stocks are down tremendously at some point, they close the stock exchange for a while, anything like that, she'll still feel that she's got plenty of money. And the object is not to
the index fund. I would just take a very broad index. I would take the S&P 500 as long as I wasn't putting all my money in at one time. If I were going to put money into a index fund in relatively equal amounts over a 20 or 30 year period, I would pick a fund. And I know Vanguard has very low costs. I'm sure there are a whole bunch of others that do. I just haven't looked at the field. But I would be very careful about the costs involved because all they're doing for you is buying that index. I think that the people who buy those index funds on average will get better results than the people that buy funds that have higher costs attached to them, because it's just a matter of math. If you have a very high percentage of funds being institutionally managed, and a great many institutions charge a lot of money for doing it and others charge a little, they're going to get very similar gross results but different net results. The very nature of index funds is that you are saying, I think America's business is going to do reasonably well over a long period of time, but I don't know enough to pick the winners and I don't know enough to pick the winning times. There's nothing wrong with that. I don't know enough to pick the winning times. Occasionally I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on. So the important thing to do, if you have an overall feeling that business is a reasonable place to have your money over a long period of time, is to invest over a long period of time and not make any bet implicitly by putting a big chunk in at a given time. There's no single metric I can give you, or that anyone else can give you in my view, that will tell you this is a great time to buy stocks or not to buy stocks or anything of the sort. It just isn't that easy. That's why you go to an index fund, and that's why you buy over a period of time. It isn't that easy. You can't get it by reading a magazine. You can't get it by watching television. You'd love to have something that said, if PEs are 12 or below or some number you buy, and if they're 25 or above you sell. It doesn't work that way. It's a more complex business than that. It couldn't be that easy when you think about it. In person, and you intend to save a portion of your income over time, I just say pick out a very broad index, and I would probably use the S&P 500. I think if you start getting beyond that, you starting to think you should be in small caps this time and large caps that time, or this foreign stock.
Because all the questions would naturally tend toward current events. And so this time I went back actually to 1942 when I bought my first stock, as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars, we had 9/11, we had the Cuban Missile Crisis, we have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amounted to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war, and that America would progress as it has ever since 1776, and that American business. If America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And America works. The S&P 500 index is the one to use. That's the one I used in that bet I made for 10 years. It's the one I've told the trustee for my wife to put 90% of the funds I leave her into. The S&P 500 is, I don't know whether it's 80% of the market value of, of everything you can buy in this country, and it's over. I think it's over 20 trillion. And you're buying America. And let me give you a figure that'll blow your mind. I think I bought my first stock when I was 11 years old. It was the first quarter of 1942, shortly after Pearl Harbor. I spent $114.75. Three shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today.
Oh man.
Well, it's
okay.
I just want your audience to think for a second.
Okay.
The answer is about $400,000.
There's no way in the world, if you've got plenty of money, that it should become a minus in your life. And there will be people, if you've got a lot of money, that come around with various suggestions for you, sometimes well-meaning, sometimes not so well-meaning. So if you've got something that's certain to deliver, it was all in Berkshire, they'd say, well, if Warren was alive today, he would be telling you to do this. I just don't want anybody to go through that. And the S&P will be I think actually what I'm suggesting is what a very high percentage of people should do something like that. And I don't think they will have I think there's a chance they won't have as much peace of mind if they own one stock and they've got neighbors and friends and relatives that are trying to do some, like I say, sometimes well-intentioned, sometimes otherwise, to do something else.
Simple.